Hey, what's up, guys? It's Jay, the Healthy Accountant, and we are talking about tax mistake. I think this is number 9 or 10, but it's business meals. You know, how you're not keeping up with how you can deduct 50% of all business meals that you have. All right, so look, this is an interesting one because when the Tax Cuts and Jobs Act first came out at the end of 2017, it looked as if they had removed all business meals from being any type of deduction. And so the immediate determination was that, wow, you can't even deduct anything. But recently, the IRS came out with guidance and helped tax professionals realize that it wasn't business meals that they targeted. So look, it's entertainment. So entertainment used to be 50% deduction just like business meals. So if you bought tickets to the Wizards, we had tickets to Wizards games. You know, if you had tickets to Redskins, tickets to different places where you would take, clients and stuff like that, you can no longer deduct those things. I mean, people used to buy boxes. Imagine those big companies that bought boxes at, all these events, but they can no longer deduct it. So, but the business meals, you can continue to deduct not 100%, but 50% of what you spend. But there's a catch. Here's the catch. You must have the prospect's name, you must have the business purpose, you must have the amount, who you paid it to. This information has to be captured, and it has to show, so when the IRS comes and looks, if they ever audited you, you got the right documentation. See, that's what this is about, guys. Tax planning is about preparing for whatever documentation you will need for the potential deductions that you will have. Some deductions are fairly simple, but then some deductions do require special elections and special contracts written up. So that's the point. You have to prepare. So with the business meals, you can even deduct groceries. Remember we talked about family employment? So what if you got your wife and your kids working in the business? You bought groceries, and every night you guys have a meeting about the business, about what's going on. This is now deductible. Oh, yes, because, or what if you invited over some friends, right? And now you're talking about business with them. It's deductible. 50%, not 100%, but 50%. But the key is you've got to keep track of it. If you don't keep track of it, just because we have a receipt, that receipt won't hold up that deduction. You need to have the right logs. You need to have the right way of keeping up with it. And if you don't, if they do audit you, they'll disallow it, and then you won't get the 50% deduction. So that's why it's important for you to plan, and it's important for you to know ahead of time how you're going to do it so that when the time comes, you do it. All right, guys, look, you want to get back with your tax advisor and make sure that you're doing everything that you should be doing correctly. Also, if you need help, you can also click the link and schedule a time with me where we will talk about your situation and create a customized plan for you so that you can have your roadmap for taxes so that you can begin saving just like the wealthy. All right, guys, if you have any questions, definitely let me know, but I look forward to seeing you on the next video.